Welcome everybody. Thanks so much for taking the time to meet with us today. Talk a little bit about non-QM. Have any of you guys done a non-QM one before? Okay. So there's a huge opportunity out there for you guys to increase your business. We'll go into a little bit of that. A little bit about the non-QM stuff, meaning it's no different than doing any other type of loan. What I mean by that is you still got to take it out, ask for somebody to live and work the last couple of years, the same kind of thing. So the main difference is it's being underwritten within my four walls versus yours. So that's really the main difference about it. So I'm going to show you a couple of things today. Introduction, what does non-QM mean today? Exactly. What do you need to know about non-QM? How can non-QM help you close more loans? Where can you find non-QM bars? And how to differentiate yourself? So that's kind of what we're going to go through a little bit today. Now, who is Angel Oak? We are a vertically integrated company. Our affiliate asset managers purchase our loans. So why is that important? So we're the decision maker down the whole sausage chain. So our side is there coming up with guidelines. We're also there doing the loans for you, finding the programs, underwriting, and then we sell them to our asset management side. We've done 23 securitizations since we started in 2013. We're the largest originator of non-QM loans. So we've been doing this since 2013, and we've done the most. Customer service comes first. I know everybody hears that, but by working with us, you have access to our underwriters. So when you guys are doing a loan and you can't figure out exactly what you need, or you don't understand the step, you can actually pick up the phone and talk to our underwriters. They're not hiding behind the doors. Common sense approach to underwriting kind of goes hand in hand with the access to underwriters. That means these loans, they're manually underwritten. We're looking for the story behind the loan. It's not like a D or EO where you put in a social security number and birthday, cross your fingers, and hope you get approval. So looking for the story behind it. Why does this loan make sense? We help originators differentiate themselves. I'll go into more of that later on, but we've got a whole marketing department which will help you guys market these programs, and they won't say anything about Angel Oak. Intuitive and simple website. If any of you guys have ever gone to my website, it's very easy. You can run a scenario there, you can look at different programs. There's all sorts of stuff to help you guys put together a loan. And then local representation. We've got the largest sales force. What that means, basically, we have AEs in different markets. They'll come into your office, we'll do presentations for you, we'll structure deals for you. So that's a big key. So we got people that will actually come in there and help you guys in person if you'll let us in. So a lot of places are still a little bit off. So what is alternative lending, and what does it mean today? How a non-QM loan differs from a QM loan. The QM rule has loans have four directive lenders that must follow. The first one is satisfy the ability to repay. Well, guess what? Non-QM loans have to do the same thing. So you got to prove that ability to repay. On a QM loan, they have restrictions such as you can't go past 30 years, or you can't have an interest-only payment. Have any of you guys ever done an interest-only loan? If you have, you actually have done a non-QM loan. Probably didn't even know it. QM tax on fees and points are max at 3%. Non-QM loans have a max of 5%. They're not high-cost loans, but they have a max fee of 5% of all fees in. Broker to debt income ratio is 43% or less. Angel Oak is a standard of 40-50. I know there's been some changes on this past month, the way that they're looking at the different debt ratios that they were doing before. So there have been some changes on the agency side. Non-QM products, they help borrowers who can't qualify for a QM loan. There's products such as a bank statement loan. This is where somebody is self-employed. Borrowers qualify basing off their income on their cash flow and liquid assets, since their tax returns and W-2s or pay stubs alone may not reflect their ability to repay. So you're actually looking at cash flows versus tax returns, because when you do your taxes, it's catch-22. You got to write off as much as you possibly can, but then sometimes it hurts you trying to get a loan. Debt service coverage ratio. This is an investor loan where it actually qualifies on subject property monthly rents versus someone's debt income. I'm going to get into more details on all these when we get into the products. Just this, it helps well-qualified borrowers whose credit profile falls just outside today's tight and flexible lending standards. Life credit event, maybe a borrower that had something happen to them, such as bankruptcy, foreclosure, needing a credit from a divorce or medical issue recent mortgage rates. We have products that are more forgiving than what agency loans are as far as time frames. No income, high assets. This is basically a borrower that has enough liquid assets where they can actually buy a house outright. They don't want to. They don't leave in the market working for them. Dividends, interest, things like that. They're actually living off their assets, but they don't actually show a lot of income on tax returns. So what is the potential of alternative lending? You can see this kind of a chart. Back in the early 2000s, you can see where agency was so more higher than non-agency. And then as you see the non-agency stuff starts creeping up. That's basically back then. You guys have been around a while. It actually, these loans before that were reasonable loans. And you can see on the next slide where the Wild West days. Those are those crazy subprime loans. You guys remember the SEVAs, the NEVAs, the NINAs, the 580, 8020 loans? That was a whole different world back then. And also back then, people that did securitizations didn't have any student games. They could care less. You heard the stories, just packing up and sending it to pension funds across Europe, all over the place. That's also when people could actually call and pick what appraiser they wanted. So they called the appraiser and say, hey, I got to have this LTV, otherwise I'm never going to do business again. All that stuff you can't do anymore. So there were some good things out and some bad things. But then everything blew up, if we all remember, in 07, 08. And there's only little blue dots in there because you got to put something on the slide. So basically that whole industry went away. And then as you can see, there's a huge potential. They're starting to grow back. These loans are totally different than what they were before. It's got that ability to repay. You got to show that ability to repay. You also got to show the standards of compliance and all sorts of things. So these are great, great loans. There's a huge opportunity out there for all you guys. So Angel Oak's average non-QM today. What I was talking about before we do securitizations, these loans are totally different than the pre-crash of 07, 08. Our average score is 742. Our average LTV is 71%. Our average DTI is 30. It's crazy. There's so many great bars that they cannot get through today's tight lending world. So there's a huge opportunity for you. So kind of look at it. So why should you care about non-QM? Benefits to originating non-QM, market opportunity, and where we're headed. Why originate non-QM loans? You want to be the standout. You want to differentiate yourself with realtors and bars. Now, how many times do an LO, especially new, when they go into a real estate office and they say, hey, guess what? I got great service, and I got great rates. They hear that all the time. So now you go in there and say, not only do I have great rates, great service, I have products that other people don't have, such as bank statements, jumbo loans, investment loans, closing the LLC, all sorts of different things. So what you want to do is you want to do the loans your competitors don't know how to before they learn how to. So you want to get ahead of everybody else. Increase your earnings. That's why we're all in this business, to make money. Save agency fallout loans. A lot of those you'll see from the self-employed bars where you get the tax returns and it doesn't work. Or they had a forbearance or foreclosure, something that doesn't fit the timelines. Residual income, a 2-for-1. We have a product where someone that may have had that life event, they haven't seasoned out to go agency. So it gives you guys a chance to get a loan for them now, but once they season out, you get a chance to do another loan for them. So you get a 2-for-1 out of that. Strengthening relationships with more referrals. So because when they're going to think of you, if you get a loan done, they're going to come back to you first. Investors with us below, this does not apply. So our loans, we don't have a limit on the number of properties you can own. So in the agency world, depending on who your company's selling to, they only own 4 to 10 properties. We have programs where you got hundreds of properties. Also, in the agency world, you cannot close an LLC on investment properties. We allow that. So you can close on an LLC on all our investment programs. The cost of not providing non-QM options, lots of, I'm talking about referrals, family and friends, relationships, and realtor. I know everybody has their favorite realtor, that realtor loves and everything else, but I doubt a realtor is going to say, hey, you know what, Tom, I'm not going to sell this house because you don't have a program. So they're not going to pass on it, on a commission. They're going to find somebody that can do that and jeopardize your relationship if you can't get a loan for them. Low and immediate earnings and that client. That bar should be yours for life. So you want to make sure that you have a program to fit that bar. Huge potential for closing more loans. Investors. Investors huge opportunity out there. 10 to 11 million is the number of individual investors that manage or own at least 2 investment properties, and that number continues growing. So there's a huge opportunity out there for you guys to focus in on being an investment specialist. Self-employed. 36% of the U.S. workers are doing some type of self-employed. And that number is only going to grow, especially after this past year with the pandemic. There's so many more people that can lay off or starting their own business. So 59 million number of U.S. workers categorized in the gig economy, self-employed. Have any of you guys ever done a VA loan? Any VA loans? Yeah. There are more self-employed people out there than veterans. So there's a huge opportunity out there for you guys. Reverse credit, what I was talking about. 5 million plus number of foreclosure filings since 2014. Also 5 million plus is number of bankruptcies since 2014. So we have programs to help you with borrowers that need to season out before they can actually get back in that agency space. Get ahead of the looming end of the refi boom. Last year, you guys probably had the best year ever. I mean, the refi business was unbelievable. It was taking orders. This is from the Mortgage Banking Association. Last year, 2.1 trillion in refis. They say it's going to flip in half of this year. Because so many people have refinanced already, or rates can start creeping up. So there's a huge opportunity out there for these loans to make up lost revenue. We do purchase cash out in refis, but this is a way for you to be able to pick up a lot of that refi boom that's going bye-bye. How can non-QM loans help you close more loans? Stop turning out loans that make sense. Like I said, these loans are all manually underwritten. We've got to follow the same rules. So we're looking at the story behind that loan versus, like I said before, the DUDO, just putting in a social security number, crossing your fingers, and hoping you get an approval. So keep doing your agency loans. Non-agency loans are a simple way to add to your income. It's that extra club in your bag. So when something doesn't fit, here's a way to maybe help you close another loan. Underserved market, self-employed, we keep going back. Jumbo bars, people have a credit issue, asset qualification investors. These are huge area for you guys to focus on. I'm going to go over a little bit of the programs. I'm not going to dig so deep in it. We've got a booth you guys can stop by. And plus, like I said, anytime you can call one of our local AEs or AEs, we'll help you through it. Just a couple of highlights on the bank statement. You go up to 90% at 700, 85 to 660. 80s, we have a program that starts at 640. Only 2 years out of seasoning of foreclosures and short sales. So especially when you start doing jumbo loans, in that world, you got 4 years out on a short sale, you got 7 on foreclosure. So actually on this one, if you actually have a short sale, you pay all the way through, and you get just some payments, but the bank agree to take a less payout. There's no season on that. BK as well, what we do on that, if it has a Chapter 13, we use actually a filing date. If it was filed over 2 years ago and paid as agreed, no waiting period. So it's for a self-employed borrower only. Business owner, 1099 borrower, or somebody that's Schedule C or anything on that. So if you're doing the business, you got to own at least 50% of the business to use business statements. If the personal ones, you just got to show that you've been self-employed for the last 2 years, or you're using 25% of a business. You're just kind of using statements or using personal ones. So we need 12 or 24 month statements, depending on which one you want to do. No tax returns required, of course, because we don't want to see the income on there. It's strictly on cash flows. And if you actually think about these, especially the personal bank statements, this gives a true identity of what somebody's cash flow is with the ability to repay. Because you're using somebody's net versus, when you guys do a full doc loan, you're looking at somebody's gross on a W-2. And if you ever had to use the net on a W-2, it would probably kill half the loans in here after you get your taxes taken out, your insurance, 401k, and all that stuff. So these are great loans. And this will probably be the majority of the business you do. I think it's probably about 65, 66% of the business that we're seeing out there right now. Investor cash flow. Some of you guys may know this as a debt service ratio coverage loan, a DSCR loan. This is strictly for investment properties. And this is what I was talking about a little bit earlier. It goes off the cash flow. It follows different rules from the ability to repay. It's almost like a commercial property where it's looking at what the monthly rent is versus the payment. So whenever the appraiser comes out and says, hey, this may rent for $2,000 a month, or our full payment is $2,000 a month, it passes. We actually have, if it's actually lower than that, we do have a program for that as well. We just come off the LTV some for you. So it's not even cash flowing, there's still a way to get a loan for that particular property. On this one, there's no limit to the number of properties that a borrower has financed. Like earlier I mentioned, 4 to 10, most agency buyers limit you. You have hundreds of properties. You need to own a primary residency or have a history of being a landlord. The reason why that is because it will throw up red flags that you might be trying to buy as a primary. And also, you close an LLC. You do this on all of our programs. Asset Qualifier. This is when I was talking about you guys earlier. This is somebody that has enough assets where they don't need to get a loan. They can actually outright buy it. So this is a good way for you guys to get a little bit more some referral sources, how you can use this to prospect with some different people. So this is basically one that's they don't need a loan, but they don't want to liquidate their assets. And it's very simple. The assets just must be sourced for minimum 6 months. They just get current statement, and you get one from 6 months ago to show it's in their possession. What we want to do is make sure it shows somebody that has the ability to manage their money. We don't want somebody all of a sudden come in with money and we have no idea and they're spending left and right. So but it's still only 6 months. Platinum Jumbo. This actually, this one needs to be updated. Last week we actually moved this up to 95%. So we actually have a 95% with no MI now. So we're probably one of the only ones that are doing the 95 right now. So this is a Platinum Jumbo. They have great rates on it. So you can see the different things: 4-year seasoning, the foreclosure, short sale, PK, things like that. Loan goes up to $3 million. Actually, that 95% loan that we just came out goes up to $2 million. And assets only have to be sourced in season for 30 days. So on all the programs, except for the asset qualifier, you just need 30 days of seasoning.
What's the reserves on that?
On this, 6 months. 6 months reserve.
95 jumbo?
Yeah, 6 months. And we do allow gift funds too. As long as somebody's got at least 5% of their money in the deal, then after that, it could be like a different family member.
Well, the 95, what's the FICO credit score?
I want to say it's either 700 or 720. I'll pull matrix later. Yeah. That's one thing you'll see, like you'll end up doing a lot of jumbo stuff with us. And sometimes what I'm talking about is, like you said, the FICO scores or the DTI ratios. We're standard at 40-50, where you're going to see most of these at 35 or 43 in the world you're used to. And then the seasoning. You got a foreclosure, you got 7 years in the agency space, so this one's only 4 years. Foreclosed select, this is that kind of person that may have a little hiccup in their life. You can see this one, 1 year seasoning for a foreclosure or short sale, or deed in lieu. Like I said, that short sale, if you paid it through, it doesn't need payments from the bank took an agreement for the earlier payment. There's no seasoning for that. 2 year seasoning for bankruptcy. That's also like on a 13, we will use actually the filing date was 2 years ago, and their discharge will pay as agreed. Loans up to $2.5 million, purchase cash out rate terms, owner second home investment properties, DTI 50%. And also we have a 1 year tax return available for somebody's been self-employed at least 2 years. Freddie, they changed their rules a couple years ago where I think you got to show you're self-employed for 5 years now. So it's only 2 years to use a 1 year tax return for somebody that's been self-employed. Problem jumbo, this is kind of more of the stuff that you're used to in the world you're talking about. But you can see once again our problem jumbo starts with a 660 score. Now it does have the same seasoning of the foreclosure and stuff that you guys are used to, but that score is a lot lower that you'll see out there. So now how does technology advancement making non-QM easier to close? Technology Angel O. We have a pricing tool. You don't have to be signed up with us. You can go in there on our website and you can run a little scenario. So if you guys have a deal that fell through and you already know the score, the LTV, what you're trying to do, you can kind of run a little scenario there. So it's a little quick way to run your own scenario, get potential rate loan options immediately. A quick wall, that's a system where if you want to go to the next step, we have a where you can reissue your own credit if you have access to it. If not, you can just upload the 1003 credit, and one of our aides will look at it for you. Bank statement review team. On the bank statement loans, what we do for you up front at the beginning of the creek wall, what we're going to do is we're going to analyze, we're going to internal group, they'll analyze that income for you. So we don't want you to try to figure out, hey, what deposits can I use, what's the percentage, what's here. We've got a group that does that, and they do it within 24 hours. So we do that all before pre-qual can be even issued to you guys. So you know going into that deal what income is going to be used. So when people write a contract, it's not putting problems down the road, or something comes up, you got earnest money, or your relationship with real estate agents, the bar, that income is vented out already. So that's kind of what I was talking about here. The income is established through the time of pre-qual, diminishes closing delays, time saved, by not having to review the bank statements. We do all that for you. We got a group that's all they do is look at bank statement income in and out every day. Target bars, we'll get into more of those, and that's where you guys will be able to focus on those business owners, 1099 people, self-employed. When you guys do, or we come out and do a presentation for your real estate agents, you're probably going to get a loan at your real estate agent, because there's so many of those guys that are, either 1099 or they have a lot of investment property. Chat. So we also have a live chat, so if you want to kind of ask a couple of questions and things like that, we got somebody through the portal. You also have access, like I said, to all our AEs. So there's somebody there that will answer your questions if you want to do a little chat feature. Our portal is real easy. Once you're set up with us, you can go in there, you can find different things. It's very, very easy. It's very, very friendly. Especially if you guys using Compass, because it's the back engine of the Compass, so it's very, very, very easy. So how can you grow your non-QM business? So let the referral partners know you can access these loans. They'll do the rest for you. We're talking about real estate agents. It's something to go in there or something different, saying I've got these different type of programs, the old vanilla. There's a lot of people where I've seen LOs, they'll go to large banks and credit unions, because some of the bigger banks, they will not offer non-QM, the Bank of America, Wells Fargo's, or whoever. So they buddy up with LOs in there, they get referrals from those LOs. CPA tax planners, that's where you want to go in and become friends and meet with these guys, because they work with business owners, so they know who's writing everything off and who needs a loan. Financial planners and wealth advisors, that goes in a little bit more with that asset qualifier. You can go to different financial planners. The good thing about that program, those assets stay there. We're not taking their assets there. They stay there. So those financial advisors and wealth advisors, they still get to make money off the assets being 100% invested. We just use it to qualify. Business bankers kind of the same thing by working with some of those banks. They don't offer these type of programs. Builders and developers, same as yourself, have something different kind of products. Private money lenders, a lot of those guys, what they want to do is they want to get their money out after a year or so, and they want to relend it again at some crazy rate and upfront fee. So that's a way too where hard money lenders want to get out. A lot of them have balloons that people have to get out. Lead providers, you can set what kind of leads you want. Appraisers, you become friends with those guys. They know who's closing loans. They see who what companies and LOs are on there, things like that. And this is just a little customer quote about doing non-QM loans and things like that. Marketing yourself. We have a whole marketing department. We will help you guys do stuff. We have all sorts of these different flyers, whiteboards, things like that, presentations. You can customize them to your company with your name, your logo. It won't say a thing about Angel Oak on it. So also the realtor presentations, if you're not comfortable do it, we'll come out and do it for you on your behalf as a partner with you. The whiteboards too, there's little whiteboards where you can brand them with your name, company logo, things like that. So you can take these and go out to different people, the bank statements, go out to CPAs, asset qualified, wealth planners, all sorts of different things. The investor cash flow, you guys can go to like these investment clubs that are all around, things like that. It's a good way to market yourself. Differentiate yourself, that's the whole thing we keep talking about. So some of the characteristics of choosing a non-QM lender, someone that's focused on customer service, non-agency specialists, we've been doing this since 2013. Focus on non-QM. That is our focus on non-QM loans. Years of experience, easy to work with. We make exceptions. The big thing about us, like I said, we underwrite our guidelines and we sell it to our capital markets. So sausage is made here, they take it over there. So we've got everything right here for you guys.
You guys do it regular conventional FHA loans as well?
We added some Fannie and Freddie, especially one reason we did that, with those new rules where only 7% can be second homes and non-owners that the government passed. So we do have some Fannie and Freddie, so it is there for you as well. The main focus is going to be the non-QM. And that Fannie Freddie stuff, you guys know about, that stuff's in a rate gate. You can turn that spigot and spill us a bucket and turn the rates high and turn it off. It's just a rate gate. But it is there for you, but it's mainly for the investment properties and second homes. Can the reserves and down payment come from a gift? Well, I was talking about before, you need 5% of your own money in the deal. The reserves cannot be a gift, but like I was saying before, our seasoning is only 30 days. So it's pretty much you can close within 30 days. It's really how fast you get that information from the bar. So it's really, it's what it comes down to.
At times, when the writing clear the condition.
I'm sorry, what?
How long does it take for the underwriter to receive the conditions?
They're running, what are they running about? Do we post them? It's probably, I'd say, 48 hours right now.
It was 48.
It's pretty fair.
Underwriting is 3 days, I think.
So we got 48 hours. We post them all for you. What's going to happen there is, as soon as you trigger, where we can get the pre-CD out, we're going to get it out. We're not going to wait for all your SIPs to be closed. When you get those things that have to be to get the CD out, we're going to go ahead and get that CD out. And close? Close is probably running about 48 hours.
Not bad.
So I can pull them up later for you. They're all posted on our website, so we update it daily. This is kind of what we're talking about too, kind of your niche going into the real estate agents, where you got different programs to diversify yourself. So there's all sorts of different things we can help you with. So you're just not going in there with that same pitch. So you have something totally different, another club in your bag. How does the broker get paid, or the loans bar paid? We offer both lender pay comp and bar pay comp. So it's whatever your company sets it for, or whatever their rules are. So there's lender pay and there's bar pay as well. You guys have any other type of questions or anything? Anything on top of your head? But like I said, if you have not done an IQM loan before, we'll literally hold your hand, walk you through it. Like I said, there you're getting this. Same thing you gotta do. You gotta get a 1003. You gotta ask the same questions. You gotta get the assets. We'll do everything for you. On the bank statement loan, we're gonna do that income for you. So we're gonna walk you through from start to finish. And it's like anything else. Once you do 1, 2 of these, it becomes second nature. So people always have the misconception, oh, I'm how to broker a loan. You actually do every day. You're doing a loan, you know how to broker a loan. Like I said, the only difference is it's my 4 walls versus your 4 walls. That's the only difference. So just remember that. We're here to help you. We'll come in and do marketing for you. We'll go do presentations for you. Anything you guys need will help. Because we look at it more as a partnership. We don't want to be another lender vendor with you guys. So we want to make sure that you guys, that's one reason we believe have those local AEs, so you guys become friends, we'll come in and do some lunch and learns for you, whatever you guys need. So please stop by, grab some other information, anything we can help you with, just let us know.